Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we are going to be revisiting Estee Lauder stock. The stock reported earnings today. It is down about 20%. I'm going to try to pull up. Yeah, we're down 20, almost 21%. This is over on Seeking Alpha's news page. So the long story here is that Asia Pacific, especially China, sales were way down again, but really they had weakness kind of across the board. But double-digit sales growth declines, it looks like, in China, Hong Kong. Now, I first warned people about Estee Lauder. Let's see. Back when for about 3 months in 2021, I made some videos. And I had one category that were sell suggestions. These were good businesses, but that were overvalued at the time, so it was just based on valuation. So you can see the list here. Overall, it looks like they came out flat while the S&P 500 was up 50%. But the main thing I want to focus on here is Estee Lauder. It's down 70% since then. The only one similar that scale is PayPal, which we actually bought near the bottom, but that's a different story. So yeah, I'm happy I was able to warn people about the valuation, but I've also written several articles since then. Also made videos on the YouTube channel after this decline, or as this decline was progressing, about why I wouldn't be buying it yet. And so far that's been a very good call. This doesn't even have today's decline. It's actually down in the 60s. So yeah, it's not even on. We're lower than we've been at any point. I want to say maybe the CEO left as well. I mean, you have to go almost back to the Great Recession. Yeah, back 2020. You're going back over 10 years to get to where the price is today. So I'm sure whenever there's a crash like this, people ask me about it. So I've been trying to make a video like it. I'm just going to try to make some short videos. I think the kind of just review really quickly my thoughts on it. So for me, first of all, I don't really buy turnaround stocks, but if we saw signs that earnings were bottoming and starting to rise again, we could maybe at that point estimate some kind of earnings growth rate that we could expect. I don't know what that would be, but there is a point where it could get cheap enough where I might be tempted to buy some at this point because it's down so much. But we aren't quite. Really, I don't want to buy it on the way down. I want to see there's some sign, even if you don't get the exact bottom, right? Everybody that tried to buy the dip, everybody that bought here thought they were smart for 6 months, and then people that bought here thought they were smart for 6 months, and maybe the people that are buying today are going to end up being smart, but I want to see evidence of actual earnings growth coming. The bigger picture for me here is China. And I've been going on. Now, first of all, let me premise this by saying I'm not some like super genius that gets everything right all the time. I had several China investments coming out of the pandemic. I thought China was going to reopen. I thought things were going to go back similarly to what they were. And China delayed their reopening. And then with the invasion of Ukraine by Russia has officially been neutral, but more sympathetic, I think, toward the Russian cause than the Ukrainian cause. And they also, their economy is suffering. So it's been an avoid for me for direct Chinese stocks, but also high risk for US or foreign-based companies doing business in China. If you read almost any of these earnings reports, China's weak for almost all these outside companies. Maybe Apple is an exception, but we haven't seen those earnings yet. But for the most part, and I still think that that's risky, for the most part, that risk remains both an economic risk and a geopolitical risk. So it's kind of like the worst of all worlds with a company like Estee Lauder. I'm not sure they actually did anything wrong other than the stock was extremely overvalued near the peak, 50 PE. They weren't even really growing that fast then. So that's all just the stock market being stupid. And then you get bad news. China's economy isn't doing well. Maybe Western brands are not as attractive anymore. And you start getting all that. And then you also have competition from other smaller companies at different places in the world. And you add all that together and you get a crumbling stock price. They also announced that the dividend was being cut today. That's probably another lesson. But the first lesson I would say is just be very careful with businesses that are global businesses that have a big chunk of business in China if they're from outside of China. I think growth is going to be limited. I'm talking McDonald's, Starbucks, places. I'm just naming a couple off the top of my head. Automakers too. So the other thing was they announced a dividend cut. So this is a lesson for dividend investors and people who invest in things like dividend streaks and things like that. You can see that by the time the dividend gets cut, it is too late. They just lost 100 years worth of dividends in 3 years of the stock price declining. So maybe not 100 years, maybe 50 years worth of dividend. I don't know. The yield now is like 3%, but it wasn't back over here when the stock price was high. It was more like 1%. So yeah, it was 100 years worth of dividends you just lost because you were investing for the dividend instead of investing in the business. So that's an important metric too. Even a S&P 500 business that's paid a dividend for a long time, there's no guarantee that they're going to keep paying a dividend if their earnings decline. So you need to be really careful, and you want to sell way before the dividend gets cut. So those are just some lessons from Estee Lauder. Watch the China stuff. If you have other stocks, I said this in my other videos, just be aware of it, think about it, make your decisions, based on weighing the pros and cons. But just be aware it's a big issue, I think. And then don't wait on the dividend. Don't pay too much. Take profits when a stock is crazy overvalued. At least trim some, right? So I think that's all. If anybody else has any questions, you can put them down in the comments. I'll answer them. If you have any requests you want me to take a look at, let me know too. I cover a lot of different stocks on the channel. And if you found this useful, hit the subscribe button and the like button. I'll see everybody later.